Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, get on to the start. It looks like a muted start coming in for Indian equity markets. A bit of soft global cues there, but likely to extend previous few weeks' bullish sentiment. GIFT Nifty signals a muted start coming in for the Wall Street, down by 15 points in early trade. US stock ended lower on Friday. It is also the Asian markets at this point of time, which are a bit of mixed. Trading on a bit of mixed note. Japanese shares, however, have climbed to their 1990s high. So that's a bit of queue out there. But oil has extended in gain as OPEC is mulling in deeper cuts. FIIs, they continue to be the sellers. Sold equities to an extent of 477 odd crore. DIIs, on the other hand, too, have also offloaded equities to an extent of 565 crore. What we have in F&O ban is what in fact is added to the F&O ban is RBL Bank. What still remains in the ban is Chambal Fertilizers, Delta Corp, Hindustan Copper, India Cements, Manappuram Finance, MCX and Z Entertainment Enterprises. What comes out of the ban has been SAIL, which has been removed from the ban. Of course, PCR ratio has dropped in at 1.02 from 1.18. Now, it is an indicator of the mood of the equity market, and essentially a ratio above 1 suggests that the traders are buying in more puts than calls, which generally indicates an increase in bearish sentiment. The number right now seems to be reducing, but is above that 1 level. But let's discuss the trade setup, strategies for the day, and few recommendations coming in from Prashant Sawant, who's the founder at Catalyst Wealth, joining us here. Morning there, Prashant. How are you doing?
Hey, morning, Nickey, and good morning to all the viewers.
What's the trade setup looking like for you? The cues that you're picking up and the levels that you'd suggest?
So I think, Nickey, there was nervousness on the indices with regards to the RBI decision on Friday. And currently, if you look at the opening, it's again a muted and a nervous opening, the pre-opening rather. It's absolutely flat for both the indices, Nifty and Bank Nifty. As far as crucial levels are concerned, on Nifty futures, we closed just slightly above the crucial level of 19,800, but a major hurdle or a major barrier resistance happens to be 19,850, 860 zone, which is just 50-60 points above where we closed on Friday. And on the downside, 19,650 for the entire week will be a major support from a trend perspective. Unless and until we are above that, we'll continue to consolidate and try to move up. But a big move would come only and only if we close above this 19,860 zone in futures. So a momentum move around 100-150 points, maybe taking us to around 20,000 odd levels again, can be expected above 19,850 close. As far as Bank Nifty is concerned, the texture and the structure is slightly weaker as compared to Nifty. If I were to choose between the indices, definitely my pick would be Nifty. Bank Nifty is struggling below the 44,000 zones. In fact, we are almost trying to break the 43,500 zone. So 43,500, 43,400 in futures is a major support. And we are just 200-250 points above that. On the upside, the major resistance will be 44,000, 44,200. So my suggestion would be to wait for a close above 44,200 in Bank Nifty. And only above that, think of a long trade. But if you were to trade Nifty, I think one can definitely go long and keep a stop loss at 19,700, looking for levels around 19,950, 20,000 odd.
Sure, Prashant. Any two recommendations for us this morning? Two stock cues that you could give to our viewers out there?
So, Nickey, I think one sector which definitely looks a base has been formed and might move strongly for the next few days is the metal sector. And in that, my pick would be Tata Steel. So my stop loss would be spot closing below 121. And a target I'm looking at is in the range of 130 and maybe extended up to 135. So that's my first pick. My next pick would be Texrail. And my stop loss here would be 128. And I'm looking at a move up to 160, 165 on this counter.
How about any banking stock? I mean, both banks and NBFCs tanked on Friday after RBI tightened in norms for personal loans and credit cards to check the unbridled growth in the segment. Anything that you like after the sell-off that has come through on Friday?
So I think definitely an interesting area, and I would like to keep the leader from this sector on the radar, which would be Bajaj Finance. It closed around 7,200 approximately. We need a close above 7,400, which is hardly 2.5% from here. So if we close above 7,400, we can say that the stock is out of the woods and one can go long, keeping a stop loss at 7,300, looking for targets around 7,700. That would be a good risk to reward. So keep it on your watch list, and only once it crosses 7,400, one can go long.
All right, we'll just address the market opener just in time, the recommendation that we've given in this case. Well, Nifty 50, we are looking at a muted start, just in line with what we were anticipating. 19,700 mark, thereabouts. Trading below that level of 19,800 is far still away here. It is a flat start coming in for the markets, just in line with what the cues were indicating in the morning. As Prashant indicated, let's talk about Bank Nifty, whether the texture seems to be weaker than that of Nifty 50, a bit of dropping that came in on Friday, and the trend acts no different in today's morning. Opening at least remains weak for this one. 0.2% loss clocked in by Bank Nifty, and it's trading around that 43,000 mark thereabouts, actually inching towards that 43,500 mark. Above that level, that's flirting around that level, let's just put it that way. Mid-cap index and the small-cap index, just to see a bit of outperformance there. The trend remains intact, so it's not complete amount of weakness for the indices. The major indices have got on to a bit of weakness, or let's just say a muted start, but the trend remains intact for the broader indices. Let's talk about Nifty IT, and for that matter, even Nifty Metal Index along with the PSU banking. These are the interesting pockets that we would probably want to check before checking into the top gainers and the top losers. Metal Index is seeing some amount of traction. Tata Steel was one of the recommendations given in by Prashant. And PSU Bank, well, a flat trend there with a bit of positive bias for now in trade. Let's also talk about the other top gainers and the top losers that we have on the list, just to see the momentum, right? Hindalco, NTPC, DV's Lab, these are some of the top gainers that we have. Infosys, HCL Tech, and ONGC. Essentially, it is the IT pack which is really doing well in trade, along with Coal India and Tata Consumer Products and JSW Steel. No surprise for guessing in there. Let's talk about the top losers there. Talk about Cipla, talk about also TCS, Axis Bank, Asian Paints, Kotak Mahindra Bank, along with Titan, Nestle India, and BPCL. Well, these are the some of the top losers that we have. Clearly, it is the banking index which is dragging the markets down, and it's the IT index which is lending in some support out there. But let's also talk about Cipla and TCS, the two counters which essentially we'd like to address, where, for Cipla, there's a bit of development. But before that, let's go back to Prashant and check with him what does he make out of this particular start. Essentially, for Bank Nifty, what does he make out?
So I think, Nickey, it's a muted start as expected. And I think Bank Nifty is trying to protect, as far as the futures are concerned, trying to protect the crucial level of 43,500. So one needs to monitor it for the first 1 hour. If we manage to hold on to 43,500 in futures, I think we can look at a pullback to 44,000 zones. But as I said, a big move in Bank Nifty can be expected only and only if we cross the major hurdle of 44,200, which says a percent and a half from the current levels. But that happens to be a major barrier. So if we cross 44,200, we can expect a rally straight to 45,000. So I would be watchful on Bank Nifty. As far as Nifty is concerned, as I already mentioned, it looks far better than Bank Nifty, and one can stay long on this index.
All right. I'd also want to address in stocks and news, Prashant. Stay on with us and we'll come back to you with more. Cipla has currently got a warning letter from US FDA for its Pithampur manufacturing facility. The warning letter summarizes contraventions with respect to methods and controls usually adopted by the facility. It does not conform to the prescribed good manufacturing practices regulation. And the warning letter also contains directional guidance necessary for corrective actions. So that's the one for Cipla. A bit of weakness seen in the counter in early deals. Losses to an extent of less than 0.5% out there. So not much of damage is done there. Aurobindo Pharma, that's another one, and also a different take on this one. US FDA has concluded in a pre-approval inspection, PAI, of APL Healthcare, which is essentially the subsidiary of the company, with zero observation. The inspection has been conducted during November 13th and 17th period and was closed with no action that was indicated. Now, APL Healthcare is a subsidiary of Aurobindo Pharma right now, and if you look at the momentum coming in for this one, it is a positive start coming in for Aurobindo Pharma. No surprise for getting in there, but Bharti Airtel, DOT in Hyderabad imposes in a penalty of 1.07 lakh for alleged violation of subscriber verification norms. Along with that, we also have L&T, which is also had the brunt of fines. But apart from that, TCS, let's pull that up. I mean, it's a big one. It's already gained in 4% as the firm has fixed in a record date of 17,000 crore share buyback, which is likely to take place in the week. And it is a good start coming in for TCS. So coming back to you, Prashant, what do you really like from the IT space right now? Some support has been lent in clearly by that basket.
Definitely, Nicky. I think that is one sector which is standing out. And if I were to talk about the frontliners, I think the stock which is definitely showing strength is HCL Tech, currently trading around 1323. I would suggest a buy trade here with a stop loss slightly below Friday's low, which would be around 1300. And I'm looking at targets in the range of 1365, 1370. So that would be a pick from the frontliners. If I were to talk about mid-cap IT, I think one stock which has definitely outperformed the entire sector is Birlasoft. So any dip on this, I would wait for a dip on this, slightly stretched around 632. So if you get this around 625, that would be a good buy with a stop loss around 615 and look out for targets around 645, 650. So frontliners, my choice would be HCL Tech and mid-cap would be Birlasoft.
All right, Prashant, we're just going to leave it at that. And thank you so much for taking out the time and having a conversation with us. Let's navigate our discussion to the fundamental side. We need to know more about the banking space, of course, which has witnessed some amount of dropping on Friday. But to take the discussion forward, we're being joined by Amnish Aggarwal, who heads the research for Prabhudas Lilladher. Morning there.
Morning.
All right, I'm going to start off with your assessment on banking and non-banking space put together. The stocks did witness some amount of, let's just say, action on Friday after the RBI tightened in norms for personal loans and credit cards to check the unbridled growth in the segment. How do you view the space? What do you really like?
You see, as far as your banks are concerned, definitely, I think some of these, particularly the private banks, they had large exposure to retail loans and the credit card outstanding and the consumer loans, they have been rising over the years. So as we see the situation today, I think there could be some amount of, say, because of the increase in the risk weights, we don't rule out that some sort of a pass-through happens to the, you can say, on the consumer side, but the impact will not be, say, uniform all across. So I think the banks have corrected a bit due to that, and this move in particular could be, you can say, impacting more like your private banks, because PSU banks, any which ways, their exposure to the consumer loans has been on the lower side. So as far as your pecking order in the banks concerned, we still continue to like ICICI Bank, HDFC Bank. These are the, I would say, two best bets as far as the PSU banks, private banks are concerned. And on the PSU side, SBI is the stock which we have been liking. So due to this very particular move, yes, there could be, say, a bit of, say, some 30-40 bips kind of an impact, but it is not likely to be, you can say, very much hyped unless and until we see a significant uptick actually coming on the side of the NPAs in the consumer loans. And given the fact that the banking sector as such is trading at not very high or expensive valuation and has not done well in the past, say, 3 to 6 months, so I don't see that it is going to have any significant medium to long-term impact on the sector. Now, as far as your NBFCs are concerned, I think some of the NBFCs which are more, you can say, more working towards the consumer loans or where that part of the business is more, there could be definitely some impact. Yes, there could be a pass-through, but it is unlikely to have much impact unless and until they look at it as a warning and then they try to scale down or they try to restrict the growth. So there could be some near-term impact on that, but in the long term, I don't think it is going to change. And again, the caveat here is that is there a change actually happening as far as the NPAs are concerned? If there is no big, you can say, non-performing assets coming on the consumer loan side, then I don't think it is going to have any major impact.
Amnish, let's talk about IT space, right? Jefferies has come in with a report where the CY24 budget could be set in lower, according to the brokerage, which poses a risk to the consensus estimate of a growth target of 7.7% in FY25 for the entire IT space. There is no clear improvement thus far that we've seen in the demand profile. The valuation to an extent is also a bit rich for some of the companies. How are you viewing at the space, and what do you like within the space? Is it the mid-cap IT space which seems more appealing at this time?
You see, IT is another sector which has not done well over the past 12 months or so. And the numbers have also not been very encouraging for the sector. Now, as far as your growth is concerned, I think there is some sort of a doubt or the cloud as far as you can say the space goes. But having said that, I think we might be looking at, say, some kind of a bottom getting formed as far as even the performance of the various IT companies is concerned. So some of the emerging segments in healthcare, ER&D, etc., I think they are likely to, you can say, bounce back as the time goes. But in the near term, yes, the IT will continue to be more like a beaten down, bottomed out trade. But at the same time, the visibility in most of the IT companies that remains slightly poor at this point of time. Now, as far as the stocks are concerned, I think the mid-cap IT companies in certain segments, they have done better than the large-cap names. Large-cap names like your TCS, Infy, etc., they have not done anything great over the past year or two. So my sense is that in the near term or the medium term, the niche companies like your LTTS or even the Tata Technologies IPO, so some of these companies or segments, they will continue to get higher interest. And over the medium to long term, I think the large cap bellwethers like TCS, Infosys, etc., they can give you, I would say, moderate to medium kind of returns over the next 12 to 18 months.
Spoken about Tata Technologies IPO. Have you got the chance to study it through? What do you make out of it? Because the revenue CAGR growth of Tata Technologies seems to be lower than that of its peers, at least something in the like of KPIT and also Cyient for that matter, and also lower than the group company Tata Elxsi. What do you make out of it? Do you really like Tata Technologies? Would you give a subscribe rating to this one?
You see, we haven't done any, I would say, detailed work on it, but whatever sense I have got is that this company is also into the ER&D space, a segment where your KPIT is there, Cyient is there, even LTTS is there, and they are having more exposure on the automobile side, and 30% of their revenues in auto, they are coming from GLR. In the past few years, the company has grown well, and given the fact that you can say it will get some premium because of the management pedigree, that is one. And secondly, I think the issue is priced attractively. Now, as far as the growth is concerned, I think the KPIT in the past 2-3 years has done really well. So Tata Technologies need to keep up with the, you can say, the momentum of the past few years. But having said that, I think they are likely to be listed gains in this stock. Now, beyond that, it depends on how the company performs in the coming, say, year or two.
Sure. Amnish, we could just leave it at that. And thank you so much for taking out the time and having a conversation with us this morning.
Thank you.
All right, 6 companies are going to be hitting in Dalal Street this week to raise in 7,400 crore from public. Of course, the names includes the like of Tata Technologies, which is going to be the first Tata Group firm to go public in almost 20 years, and Indian Renewable Energy Development Agency, the first government offering since LIC in May 2022, is also going to be hitting in the primary markets out there. A couple of more there, but with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.